We're going to go through a balance sheet, what a nonprofit balance sheet would look like, and we're going to use problem 16-4 on page 680 of your nonprofit and governmental book. And we have a whole bunch of accounts there, as you can see on that page listed. We also have additional information of the endowment fund consists solely of investments except for $50,000 of cash and has no liabilities. Restricted operating gifts include $115,000 of cash, the pledges receivable, and $25,000 accounts payable. And the deferred support and capital contributions relate to unconditional pledges collected. Okay, so let's get started. Let's start off with cash, and our cash balance that is listed there is $350,000. So we're going to start $350,000, but we're going to take out $50,000 of endowment cash because that's going to have to be reported on a separate line in the assets restricted for endowments. So our cash that we're going to show is going to be equal to $300,000. Okay, next we are going to do accounts receivable. Accounts receivable is handled like it is in financial reporting. And for profit, we're going to have our accounts receivable of $120,000 net, and we're going to report that net of our $20,000 allowance for uncollectible. And that amount is going to be equal to $100,000 then. So $120,000 minus the $20,000 allowance. And we're also going to do the same thing for our pledge receivable. We're going to have net of our $100,000 allowance. So pardon my running over the columns there, I'll just abbreviate it. So we're going to have a net reported of $600,000, which is going to be the $700,000 minus the $100,000 allowance for uncollectible accounts. Inventories, straight across $300,000, no adjustments there, so we're going to list that. Okay, investments, this is where it gets a little trickier. Investments, we're going to start with our $15 million of investments. From that, we're going to subtract our investments from endowment. So how do we figure what our endowment is going to be? Well, we have a endowment fund balance of $2,850,000, and that's found in the liabilities and fund balance section there. So from that, we know from statement 1 there that $50,000 of cash is actually endowment cash. So we want to subtract that from the $2,850,000 endowment number. So we're going to subtract $2,800,000, which is restricted for our endowments. So we're not going to report that in our investments. We are also going to make the assumption that below our deferred amount for capital contributions, that $1,200,000, we're also going to assume that those restricted assets are invested in investments. So that leaves us with $11 million worth of investments. Okay, so that's where we're going to put our assets restricted for plant purposes, which is that $1,200,000 in investments. Oops, need one more zero there. Okay, our next line, our assets restricted for endowment, so that's going to be our endowment money of $2,850,000. Okay, which is the $2,800,000 investments that we talked about, plus the $50,000 cash that's restricted in endowment. So that's how we came up with those. Now notice we don't necessarily have to break those out, these two out number wise, but it does show us that those assets are restricted. Okay, next we're going to have our land, buildings, and equipment, and we're going to have to net that. So we're going to net that from our accumulated depreciation, which is 10 million. Of accumulated depreciation. So our land, buildings, and improvement in equipment is equal to, we've got $1 million. And then we're going to add our 35 million in buildings and equipment improvements, excuse me. We are also going to add our 2 million of equipment, and then we need to subtract out our 10 million in accumulated depreciation. That gives us a $28 million balance for land and equipment, net of our $10 million accumulated depreciation. And then our other assets, we're keeping that in there as $150,000. We'll then total up. I'm going to draw a quick line there, and we're going to do the auto sum and add up all of our assets. And that gives us total assets of $4,500,000 of total assets. So we know our liabilities plus our net assets are going to have to equal $44,500,000. So let's go through and calculate those items. Our accounts payable of $525,000 stays the same. Okay, our accrued expenses payable of $100,000. Oops, one too many zeros. That stays the same. Unearned revenues, which are unrestricted, of $75,000, those we keep there. Now notice the next line there is the deferred support on restricted and deferred capital contributions. We are not going to list those as a liability. Those will be addressed in our net asset section, because we don't defer revenue in that particular category. So we handle that through our restrictions in net assets. So next, that leaves us then with our long-term debt of $6 million. And so we'll add those up, and we'll get our total liabilities of $6,700,000. Next up, our net assets. Well, our permanently restricted is obviously going to be our endowment, and we had figured from our problem there of $2,850,000 is our endowment. So permanently restricted, those are always going to be listed first. Then we have our temporarily restricted assets. And the first one I have set up is for specific operating purposes. And there we have our deferred support of $4,500,000. And then we're going to add our restricted for specific programs that's in our net assets, or our fund balance that was listed before, of $1 million. So we're going to have specific operating, temporarily restricted for specific operating purposes of $5,500,000. And then we have our deferred capital contribution for that plant expansion of $1,200,000. And that's going to give us our temporarily restricted number of $6,700,000. Okay, then what we have left is our net, our unrestricted amount. So we currently have invested in plant, which was given $22 million. We have undesignated amount of $6,250,000. Oops, not quite that much. $6,250,000 is our unrestricted, which has no designated purpose. Our total unrestricted is $28,250,000. So remember, we can designate money. So we have invested in plant. We also have designated. our total net assets then is going to be equal to our 28,250 plus our 6,700,000 plus our permanently restricted gives us our 37,800,000. And then finally, we add in our total. We're going to take that number, our net assets, total net assets. We're going to add our total liabilities, which were calculated above, of 6,700,000. Gives us our 44,500,000, which matches our net assets. Again, the biggest difference between a non-for-profit balance sheet and a for-profit balance sheet is we break out the assets that are restricted as a line item and also assets restricted for endowment. So those assets are going to be broke out separately. And then the biggest difference is going to be the net assets. And under net assets, we are going to record our permanent restricted, temporary restricted, and unrestricted numbers. So that is how we put together a balance sheet for our nonprofit.